I've been
Right,
giving
right, right,
loads of
right.
people. Yeah, so I have to have the chips installed, plugged in,
Installed and actually
verified.
working, generating
Yeah,
revenue. Yeah.
yeah, exactly. So that takes time, and I think people in crypto they're like, put on the trade, let's make some yield, and I'm like, it's not a basis trade, you know. It's not
This
like
ain't no
it's
funding rate ARP. Yeah,
yeah,
yeah.
even
Yeah,
giving
yeah.
money to a borrower institutionally. That's it's not fast, but it's much faster than a physical delivery, install, delivery,
Right.
and money generation. So
I just wanted to let you know, jail's not that bad. It's
All views expressed by the hosts and guests in this podcast are solely their opinions and do not reflect the opinions of their respective employers. Guests and hosts may maintain positions in the assets discussed in this podcast. This podcast is for informational purposes only, and nothing in the podcast is intended to be financial, legal, or even life advice.
All right, we are live. How have you been? How's the market?
it's been crazy busy on the AI side, like an absurd amount of inbound. Though it's been great in terms of that side. Originally, I would say in the beginning of the year, we were trying to deploy capital, and now we're kind of flipping over to the other side where we need to start sourcing the capital as
Yeah.
opposed to just deploying it. And it's like a confluence of many factors, like private credit kind of going like uh, massively through redemptions, and a lot of the AI sector is trying to build out. Like Allbirds is kind of buying chips. We have to call with them.
Yeah, which is
And
this
so
morning. Oh
like,
wow, that's crazy. Yeah, yeah.
yeah, it's because there's nobody that's playing in the sector of like financing. Like one of the a very large like data center in Europe. They're working with like two well-known investment banks, and they had this entire presentation why their chips can't get financed under $200 million. That was like their entire like 3 pages of a slide. A slide deck, and yeah, so it's just kind of like I think people are starting to get to know us, and especially the new cloud sector. But I also
Right.
think just broadly, every single AI company in the world, which is soon going to be everyone, is starting to buy chips. Whether you're
Yeah.
LLM, inference, rental, token factory, like you're going to buy chips, because it's always more affordable to pay 12% interest than paying
Mhm.
100%, 80% in rental income,
Yeah.
or just pure rent. So yeah, that's just how we've seen the market evolve, and it's been interesting without doubt.
That's awesome, man. Because like I do feel, I mean, like again, this is gonna sound like I'm doing like marketing again, but like you're like at the convergence of, I mean, like stable and like AI, right? Because like, I mean, you could say like whatever you want on like other interesting yield sources, like exogenous and so on, but like this is like one, I guess, like overlapping like verticals that you can't really deny, like that there's a lot of interest, and like for these AI companies, it's also like more capital efficiency if they can use their chips as collateral and blah blah. But yeah, dude, let's take a step back a bit, like before we get into the very specific. Just as a refresher, quickly, what is USDAI?
USDAI is both a stablecoin, and it is a yield-bearing position that provides loans against GPUs. So that's the high-level description. They both play kind of into each other, which I'll get to in the later part of the video. But for the most part, we're just providing financing for chips, and chips are one of it's literally the most amount of spend we're doing in the entire world is just buying GPUs for the next 5 to 10 years. There's really nothing else that's speeding up in terms of capex. It's more money than
Yeah,
we can even imagine possible than any other infrastructure spend that we've ever done. In the last 10 years in the US, from like 2014 to 2024, 2015 to 2025, we spent more in one year than all those 10 years combined together for any
yeah, it's
infrastructure
crazy.
ever built in the US. Yeah. And the issue is that there is no easy way to finance these chips at certain scales. And the reason being is that they depreciate, they go obsolete. And traditionally, like you just have to go through different mechanisms as opposed to doing
Mhm.
asset-backed financing, which is how you typically scale. So they have to convertibles, they have to go to private credit, they have to like issue debt against the equity, and all of that is starting to break. Like you see, Oracle can't issue any more debt. Private credit's in retreat.
Right.
BDCs are trading under NAV. So how do you raise money? Well, you have to solve the first problem, which is how do you get a loan against a chip? And it's really hard to do. And we know this because we tried doing it ourselves 2 years ago, and we just couldn't get a loan. And I'm like, how do I have to pay 100% a year in rental fees of the value of the chip, by the way? That's how much you're paying in rent to mine BitTensor. And I'm like, I should just get a loan. You know, like I should just buy the chip and get a loan. As you should, you know, that's just, mortgage is always better than rent. Sometimes it's worse. So that was kind of like, the realization of like, this is the market to solve. And the TAM is so large. It is going to be the greatest source of yield, for the next 10 years. It just has to be structured correctly. So that was kind of like the problem we're solving. Like, how do you structure it correctly?
Right. Dude, I saw that you recently, it's not really like recently, but like in the past month or two, like I saw that you've been tweeting a lot on like your thesis and like how all of this would culminate. At the same time, so like this is more of like a two-pronged question. So I want to understand the last part of the explanation that you just said. So like, and on one side, people or like CT might think that there are way too many stable coins, right? But then at the same time, you do seem to have like a very strong thesis that like this is not just, you know, like a minor improvement. You know, we're not like tokenizing like another like T-bills or like money market funds and so on. Right? So like I know it's a combination question, but I would like to get your take like on like whether one, you do think that the stablecoin space is kind of saturated, and if so, like how do you sort of like present yourself as like, hey, we are not the same because we're like addressing this thesis that you often like tweeted about.
I would say every single RWA stablecoin has broken and will continue to break because of one issue. You can't get your money out. And I know this extremely well because I lost money on Grayscale, which was the definition of money that you can't get out. I was trading at a premium. One BTC is actually worth 1.5 for a while, and then
anyway.
Exactly, and then it's why did it go to a discount? One BTC is now 0.75 of BTC. Well, it's because you can't redeem it, and this is what you're seeing with business development corporations, which is, you know, the Blue Owl or the BlackRock, publicly trading private credit, is that they just turned off redemptions. They just said no. This is what happened with usual money, right? Oh yeah, you can't actually
5% a quarter. That's it.
For usual, they just said no. You just stop. Like, sorry, you can't get out of the house. You're locked in, and then you go crazy. You know, it goes on a discount. You're under house arrest. Like, and yeah, that was kind of like the first thing. It's like, how do you get your money out? That's really it. It's like, if you put money in, how does it come out? The real benefit about GPUs is actually its flaw, which is it goes obsolete. Like, the stuff depreciates, quote unquote, on paper. It doesn't actually physically depreciate, by the way. When I say depreciation, it is totally about the next generation killing it. You know? And that requires it to have very high cash flows, kind of like Bitcoin mining. Bitcoin minings are also very short dated, so it generates 100% of its value of its chip in the course of a year. It's closer to like 70 to 80.
Right.
That is liquidity. It's cash flows. So every single month you can redeem from the principal, and that's how we, one, de-risk, two, repeg, and three, like, just accommodate for DeFi users who really are distrusting. But when it comes to getting money out, that is our entire focus. Is you have this incredible yield source that is going to literally take us to the future, and it can't get financing. But if you structure it the right way, that accommodates to the most distrusting person, to me, that's a DeFi farmer, and they should be, because you should be pessimistic, then you really can finance what should be the basis of humanity's progress, which are GPUs. It just has to be structured correctly. And that's what I spend all my time doing. And that's my goal in terms of education. It's just like, how did we structure it based on what we see in terms of money coming in and money that wants to get out?
Got it. No, that's a fair point. So, I mean, like, just like quickly building on top of that, like what has been, I guess, like the main discovery challenges, or like, oh, this is like one thing that I didn't really realize, like as you scale into like hundreds of
Yeah.
millions, when it comes down to like the redemption and blah blah. Yeah, is there like any story from like the past 6 months that you wanted to share there?
What has been unique about the market? One is I thought we were going to service a very specific customer base, which was just like neoclouds, which are people that own the chips, but they don't own the data centers. The data center is the shell, literally the rectangular square in the middle of nowhere called the data center. And then the neoclouds is a company that puts the GPUs in it.
Right.
And generally, there's a reason to the division, right? For the land, the power, and the shell, you can securitize that market. If you get a loan against a piece of land, you can sell the debt very easily. For GPUs, you can't because it's so short duration. These other ones are like 30 years long, right? Power, 30 years. Land, 30 years. Building, 30 years. So you can resell the debt, right? It's just very easy. The securitization market is very, very strong in that market. Like chips are just not easy. You don't really know the life of them. And if a bank doesn't know for sure that there's a 30-year market to sell into, they will never issue a debt instrument, let alone have the speed to accommodate for it, because it's going to take them 2 years to issue. So there's this kind of division, but I thought only the neoclouds would be borrowing from us, these customers. But then we've been starting to get these token factories. So pretty much when this company that puts a GPU in a data center is like then renting it out to like an AI company, there's now this new company between the one that owns the GPUs and the one that's actually consuming the compute, that it can increase the amount of tokens you generate, because that's what you consume. Not crypto tokens, but like how many tokens can you generate with a single chip? Yeah. And then they're like, why do we need these neoclouds? Why don't I just buy the chip? As a food guy, it's like I can generate 30 tokens instead of 10, because we're efficient. Just like exaggeration, but like I can be way more efficient with a single GPU because I have all the software and tech. And yeah, and then what happened after that is the rental companies, the one that their token generation is providing, they're like, why don't we own the GPU? why don't I? Well, and now the LLMs are like, why don't we own the GPU? So the reason none of them have even thought about even buying a GPU is because it takes $50 million to build a cluster. But we're coming in saying, no, it costs 10. And the rest is you pay down with your cash flows. And they're learning what a mortgage is. And it's like, oh, what this is a mortgage. So we've kind of started marketing to the end customers of AI every single AI company in the world is thinking, I can just get a mortgage. I can own this shit. I just have to take a bet on the residual value. And they're very bullish. They're like, the chips, they're worth 10 years useful life. We think it's 3 years. And we will always do 3 years.
Right.
Yeah, but they have more market information than I do.
Right.
Yeah. It's also like, I think that what surprised most people is like how much the chips values have retained versus when we started. People are like, this is worth H100 3 years ago, it's going to hit zero next year. And then it just went way up. It just like pumped like crazy because now you're getting a better price for H100 than you did 2 years ago because there's so much demand. Now, why is it pumping? Why are rental rates going up? Why are prices of chips going up? Well, it's because people are really underestimating what the transition cost is per chip. We haven't really seen this. We've seen it for A100s to H100s to 200s. And by the way, Mythos and stuff like this, the reason it's so powerful is because we're just getting to this Blackwell generation, the latest, the next generation chip, not the latest, that's the Rubens. But it took us 2 years to get here. It's been out for like a year and a half. And we just haven't.
What you're saying is that like that's not even been fully adopted, right, by the market.
No, not at all. Yeah, not by any LLM. They're just starting to do this, and that's why you're seeing like, and that's why people are like, China, they can have the H200s. Like I don't give a shit. Like we got fucking Mythos coming up on Blackwells, and they don't realize how long it took, because they didn't realize how long it was going to take to install. It's not even to train; it's to install, and then what happens like. there's just no supply, and you see supply just crashing down because demand is so high and then supply is just so slow. It's coming, but it's just so slow. So you've seen price of chips just increase, and that's like a variable people don't even think about. They're like, yeah, it's just gonna be oversupplied. No, it's gonna be undersupplied indefinitely, and it's becoming a scarcity issue. And our belief is that I think people are too focused on the way you finance projects. People are like, there's not enough power. This is a very common thing people say. There's not enough power for chips. That's only for the biggest guys. If you're a massive Amazon, you need a gigawatt, and a gigawatt is hard to find. But if you want like 10 megawatts, 15, 5, these are big build outs too, right? It's like 20 million per megawatt. Like it's like 3 in a row. You can find that all over the US. You can find it down your street. You can find a megawatt. So if you can start capitalizing on these small pockets of, they have access to power, but they don't have access to money, financing, capital. So if you can finance this edge tail, you really are going to be an alternative to the hyperscalers, which are just large neoclouds. But yeah, that was also very surprising. It's just like, wow, money, like these chips are really, really, really worth their while. And most of these neoclouds, if you're, I'm going to go a little financy. It's like they're calculating MOIC and IRRs when they do the financing models, and they're actually modeling for a single-digit IRR. They're thinking they're going to be 9% because their input is like 5-year useful life, but they're really betting that now in 5 years it's not going to be worth 0. It's going to be like 30-40%. So their IRR is actually just pumped to like 30%, 40% if it's on a good day. So a lot of people that's why you're seeing neoclouds repumping, is because the outperforming what the residual value was expected to be.
Got it, dude. I mean, this is interesting. I mean, like, I think these are like contexts that, I mean, like, you're very deep in the weeds. So like, I wasn't even aware yet. I mean, like, I've seen like Blackwell's like presentation for quite some time, but you're saying that they're only starting to like adjust to like all of these. It's funny. It's almost like software people underestimating the time that it takes to do like physical asset business. Like there's more time that it takes.
There's a reason CoreWeave is not in SF. It's in Jersey because that's where the money is. And when it comes to assets, an asset is completely tied to an interest rate. You can't call something an asset if you don't know the mortgage rate. It's like a house. Like, is $1 million house expensive, or is a mortgage of like $20,000 a month expensive? That's scary. It's like, wow, like this is more than my rent. That's immediately what you think is like, my mortgage is more than my rental payment. This is expensive. You don't think this is $2 million house anyway. Yeah.
No, that makes sense. Well, I mean, I want to segue into the more exciting stuff. Well, you've been building this for quite some time, had a lot of success, a lot of traction. I saw your tweet like a couple hours ago. So yeah, tell us more about what's next. What's Chip? I mean, that's a good ticker. But yeah, like shill us.
So Chip is what controls the interest rate of artificial intelligence. That's kind of our objective.
I love it.
Yeah. There's there is this missing reference rate when it comes to how you scale AI. And people know the rental rate of GPUs, but they don't know the interest rate. And this is a mortgage-based economy. What does the rental rate do? It pays the debt. That's pretty much it. What is the interest rate? It's going to be the big question. It's because it's not set. The market kind of knows what it is based on some risk parameters, but really it's going to be set by the users of the owners of the chip. We are an interest rate protocol for compute hardware. It's compute hardware interest protocol chip. And that's kind of what the objective is in terms of the primary utility. There are other components that is determined by governance. Like if we want to do buybacks based on cash flows and the money we make as effectively this AI-like bank, but not actually a bank, to be like this yield, the yield for AI, that is also governable. Now, I can't say that because it's a decentralized organization. People can choose. There are other things we are thinking about. I think one of the best things that crypto utility has done is that it prices priority. and prioritization. And one of the top things you prioritize in our protocol is the redemption. How do you get out first? And right now it's mostly like tokenless. It's like you just choose whoever bids their own cash amounts, they'll get out. So that would be used again for somehow with chip, whether it's staking or it's fee reduction. But that is kind of also how you play into what I think was the best use case of token utility, whether it's Solana tokens being used for payments for prioritization all the way to exchanges. It typically is like high intensity moments that you can charge a fee for, that I've seen like as a great value pool. And generally I think people have been bullish on layer ones that are like focusing on trading and prioritization, where it is important and you're willing to pay. So it becomes an important part of payment. And in our case, it's it is the redemption that's very important. And so we're still iterating on the utility of it. But for the most part, it has very strong utility on day one. But it will expand to like what is probably one of the most important parts of the development of AI, which is what is the cost of capital. AI is very much a capital problem. It's not an innovation thing. The innovation already happened. We have to harness what's next, which is like how do you keep up with the pace? We are getting rate limited on Claude. Why are we getting rate limited? There's not enough compute. So, and that's from a number of bottlenecks. Energy being one of them, but it's not a one all be all bottleneck. For smaller guys, there's plenty of energy, just not enough financing. And even the big guys they're now reaching to the point where Blue Owl can't come to them. These private credit funds can't come to them. Where are they going to get the money? They can't issue debt forever, but they can issue against the GPUs forever. It just becomes a lot more scalable. But yeah, that's that is the objective of the governance token, utility token. And I think we also kind of, and why are we launching now is a common question we get is, I mean, you can always,
please.
I don't want to admit that I'm beta to the crypto markets. I was like, for one, and I was like, we should just do this, rip it. I also think we're at a great time to decentralize. It's like, we're just starting to see PMF. And I think people flooded us like, hey, you don't have any loans outstanding. And I'm like, well, actually, most of our, and for the entire time, our loan book has been max utilized. They've just been not installed. We can always escrow money for a deal, and we're just not going to release it because I'm trying to protect users with this right parameterization. Like, if it's not installed and making money, you're giving a loan to an office where the tenant hasn't moved in. The same idea. Or they have to be in there. They have to be. You can't get a loan for a house unless you have a job. If you have a job, you can make money to pay down the mortgage. If you're giving no income, no job loans, ninja, like then it's 08 all over again. You know, like if I'm giving loans to people, so I have to have the chips installed, plugged in,
and actually
verified,
working, generating revenue.
Yeah, exactly. So that takes time, and I think people in crypto, they're like, put on the trade, let's make some yield. And I'm like, it's not the basis trade, you know. It's not like it's
funding rate ARP.
Even giving money to a borrower institutionally. That's it's not fast, but it's much faster than a physical delivery, install, delivery, and money generation. So we've actually, since the very beginning, we've had more deals than we've had cash, and we're just getting to the point where the installations are starting to hit. And it's not just us. Every single neocloud in the entire world is going through delays because of supply chain. Is that a risk? No, it's just it just takes longer by a little bit. And we have like 50 mil of loans released, but we still have like another 200 mil of escrowed capital for deals that have, a lot of them have the chips in the box, in the data center, but not plugged in and generating money because there's other dependencies. There's InfiniBand, which is a connectivity. There's random stuff that kind of stops it. One of the deals.
I was just very curious there on what you said. Like, what's the main reason for these companies if they already have the chips? Like, why haven't they started using it? Is it just because of these supply chain or other factors that I'm not understanding?
Yeah, one of the deals, literally, the chips were in the data center for 3 months. They're just missing they got the order wrong and the wire was wrong. I'm like, all right, well, I'm not gonna release the money. Like,
Right, right,
and
right,
they're like,
right.
can you please release the money? I'm like, no, it has to be working. I have to check the power and the serial number. So
Yeah,
we have
yeah.
these other boxes that we bring to the data center that attaches to the chips.
Ah,
And soon on our UI, this is going to be really cool. We have a world map of
oh,
all the chips. Soon
yes, I
you'll be
saw
able to
that.
click into, you can click into the chip and you can check if it's actually running um, with a hash proof with Chainlink with this like
Right.
third party box that is 24/7. And
Ah,
this is proving one to one, right? And this is very unusual for an asset lending market because
yes, yeah,
sometimes you can't verify that a car is owned by a dude.
yeah,
How do you repo a car in Harlem? Well,
yeah.
you can go on YouTube and there's great videos of people getting shot at because this guy's
Okay.
trying to take your car and then bang bang like give me my fucking car back. And yeah, the recovery rate of that is so low.
The recovery rate, yeah.
Yeah,
I know, I
but
know.
for GPUs, it's in a it's in a tier data center, air conditioned. You can't even
Yeah.
make popcorn in there, and yeah, it's like, and you'll get the chip back, and that's like the big focus for us. Like, how do you make sure that I
Absolutely.
can get the
Yeah.
chip? Well, we have a great isolation of the chip from the neocloud. You take that right away. You can't unplug it. We also have insurance in case it is stolen. In case there's a tornado, we also have insurance for that. But
I
yeah,
see.
so it's just making sure, can we actually repo the chips? Can we verify the chips are there? And that's most of the risk is just making sure that it's there.
Got it. Got it. No, you just said a lot of good stuff. Basically, it's like balancing the supply and demand side, and then like at the same time, chip is going to be this governance token that controls the interest rate of the compute and AI era, right? So that's the whole thesis here. And like obviously, I do think I'm more on the side that's like you can't always like wait for the perfect market. Like eventually you got to take some actions. There's like some trade offs here and there, but okay, makes sense. I think you've explained a lot. One last question for me is really more along the line actionables. Like if you are an existing holder or if you're not a holder and you want to participate, whether in this upcoming launch or let's say like if there's like anything that you want to share or shill, like what would that be?
I think Twitter has done a really good job explaining all the risks of our protocol through FUD, which is great. I highly recommend everyone to read every criticism that has been ever written about our protocol because our product wasn't perfect when we started. Aave rejected us in the beginning. Aave
Hmm.
was like, nah, this is too risky. Here's a list of reasons why. So we addressed all those reasons. One of them was like your first loss structure doesn't like defend the underlying value enough, and the auction is like kind of questionable. So we got rid of
Hmm.
the auction. So there actually is no on-chain auction anymore, and it's
Right.
actually just a guarantee by a reinsurer. I shouldn't use that word. It's like it's a payout based on the loss given default, and
Right.
they'll be
Right.
placed. This is the first of its kind, but that was the standard of Aave. They're like, you have to give us a very, very high certainty that it won't happen. And I'm like, well, I will have to pay a $300 billion reinsurer,
Hmm.
whatever bits. And I'm like we solved it. I'm like, okay, great. And so we try to outline every risk. And I guess the reason I'm saying this is because I want everyone to know what they're really investing in terms
Yep.
of the yield product we're selling. We're selling yield. We're not like a fund. A fund was really trying to maximize IRR and MOIC.
Yeah.
We're trying to remove the risks so we can sanitize this yield, which is the most important yield in the world today, which is how do you scale GPUs. Um,
Right.
and we do have this governance token that is launching, but or the foundation does, and that's certainly nice, but the product is a product and the token is a token. And I really highly encourage people, like, if you want to build a thesis around us, understand what we do. Which, by
Yep.
the way, no one else in the entire world is even conceiving that this is a sector worth disrupting, which is Wall Street. The second largest business in AI, I call it, after Nvidia, and above OpenAI in terms of revenues they make. And just understand what we do, the risk that we have to underwrite, the sector coverage that we represent. And once they understand that, then understand part two, which is if you solve this issue, are you seeing that we're developing any PMF? Are we
Right.
servicing customers that banks would never otherwise service. And if you think we are doing something and we're at the cusp of something big, you should build your thesis. And this is why we're launching now, instead of launching when there's $1 billion of assets outstanding.
Makes sense. Cool, man. I wanted to quickly wrap it up by maybe saying that you like tweeted that you're hiring for head of capital formation or something like that. So yeah. just want to help you shill that if like anybody's listening to this or seeing the tweets and clips or whatever, like we have to get into clips, TBPN like 200 million, but that's a different story. But anyway, yeah. So like if anybody's watching this, David is hiring. And any last few statements that you want to share for the audience?
Yeah, we are hiring. That is, we're hiring for multiple roles. One is general counsel. We're very interested in. We have a lot of structured instrumentation that we do to be compliant, be not a security, but at the same time be a new kind of instrument. And secondly, we are hiring like a head of capital markets in Asia. This role will really focus on like just education of the risk parameters. It does require somebody to have some traditional finance background. If they can't explain like this market, I think it's a little tough to hire for the role because it will be mostly finance talk. We have an incredible user base in the APAC region and also borrower base. So we'll soon be announcing this new platform specifically for deals in Asia. So we will have like an expanding like neocloud business over there. This role is really focused on just kind of the financial literacy in terms of the large depositor base. But at the same time, it's also just obviously somebody with like a broad network in terms of capital allocators. It doesn't have to be family offices. It could just be any form of capital. Which is, the whales of the world. That will be the interview questions. Is like, who do you know? We can't. We're in a growth mode. We can hire someone underneath them, but right now this is a head position. I've gotten a lot of inbounds, but I'm like, I feel like either one, they don't have a traditional finance background, or their network is not that strong. It's definitely like a role that we're very keen on hiring for somebody who does believe that AI is going to be the greatest yield for the next 10 years, and I do think it is.
There you go. Hey, if you're a banker and you think your job would be like replaced by Mythos, you might as well come here and like do like all the relationship stuff. But anyway,
yeah, exactly.
Cool, dude. Any question for me?
What else are you farming right now? Where is the yield in DeFi?
I can say some and I cannot say some, dude. But the funny thing is, like, man, like LP deals are safer than on-chain stuff.
Yeah,
it's like things have like reversed completely. I mean, like I'm gonna yap a bit. I have to jump at like 5, but like, dude, like one thing that I'm very fascinated to see, like this will either be good or super chaotic, but I guess it's always like in the middle. Without naming names, it's like all these funds that are like tokenizing their NAV as a market neutral fund and then like tranching it and then like looping it. I'm like, it's gonna end in a weird way one day.
Yeah, I mean, we used to do the tranching stuff, and it was just I think it's necessary, especially as we get bigger and bigger. The question is, what are you tranching the risk of, and can it be priced? And we used to even have something called the automatic tranche maker. We can create an infinite amount of tranches for any format, for any like a liquid asset, and that was what we thought was like what we're pricing is illiquidity of an asset on the last given default, and that unknown. And I think that was certainly interesting. I think a lot of people try to tranche things that don't need to be tranched just for the sake of innovation. Which is like, yeah, I should tranche Aave. I'm like, there is no reason to do that. It's like it's liquidation based. Like, what's the worst? Like, you have a one bad day. Like, the underwriting is weird, but I'm like, I don't know. It's not something that's worth tranching. But I do think there's great innovation happening in that sector, and I think for crypto as well is invent something that you never even thought was possible. Like, I love 404s, like ERC 404s. Was so cool to me. And I'm hoping something like that kind of comes out of that sector. But for now, doing traditional tranching, I think people just kind of missed the point of it. Tranching was invented to solve an issue. And I hope we see new primitives kind of come out, because I think it will just start like a new asset class enablement. But yeah.
I love that, man.
sure.
Hey, no, dude. Like, again, thanks for your time. Today. It's always a lot of great pleasure, like speaking with you. Like, you have like a good mix of knowledge of like just like the AI stuff and like actual like being like like a TradFi guy and actual like a crypto OG and so on. So yeah, always cool. I'll see you next time. Like, have a good success with the TGE, and yeah, that's it for today's session, folks. Cheers.
Thanks,
Take
everyone.
care, man. Bye bye.